This week, I've got another packed full update for you guys. Last week, we had record number of investor home purchases, lumber prices shot up, and the Biden administration took more action to help homeowners pay their mortgage payments. We've also seen the condo market heat up in the last quarter, setting its own new records. And in this video, I've got many more updates for you, so definitely stick around to the end so you don't miss any of the updates as they could affect you. Alright, so let's get right into the updates for last week. Let's start with forbearance. The Biden administration last Friday took new action to help reduce mortgage payments by up to 25% for some borrowers. They say that they've taken this action to help prevent a 2008-style housing crash from occurring. This is to help some homeowners who have fallen behind on their mortgage payments to get some help, and this only will apply for federally backed loans. This comes as the forbearance application period is coming to an end in September, and the federal moratorium on evictions is set to expire at the end of this month. There are approximately 1.75 million people still on forbearance as of last week, and this number continues to decrease. Last week, we saw about 1.86 million people still on forbearance. So in 1 week, it's decreased by about 100,000 people. Next up, let's talk rental prices. The rental market is still in high gear, still trying to catch up with skyrocketing housing prices. We've seen rental prices recover and surpass their expected 2020 levels had 2020 been a normal year. So in many parts of the country, rent has either just rebounded to what it was before the pandemic or also seen a significant increase. And last week in my housing update video, I broke down the rental market in much more detail. So if you want to get a full update on where the rental market is, definitely go back and watch my video before, as things haven't really changed much since that video. Now let's move on to some records that real estate investors have set this year. Real estate investors have hit a new record. They have bought more homes in the last quarter alone than any other quarter before. This even surpasses their pre-pandemic levels. They purchased just under 68,000 homes in Q2 of 2021. This is up 15.1% over Q1 and up 106.7% over Q2 of 2020, when the market was stalled due to the pandemic. They bought up $48.5 billion worth of homes, with the average home costing just under $440,000. This figure is 24% higher than the year prior due to surging housing prices. And not only are they just buying more houses, they've also surpassed their market share pre-pandemic levels, coming in at 15.9% of all homes sold in Q2 being to investors. This number was just short of their 16.1% record in 2020. Investors view rising housing prices as a golden opportunity. This is because most investors have access to much cheaper debt than consumers do, and they see rising housing prices as a guaranteed return on their investment. And not only have they just picked up in buying, they've picked up in buying specifically condos and single-family homes, and they've pulled back on buying multifamily homes that many investors focused on prior to the pandemic. So let's take a look at 2019. In 2019, investors made up 33.3% of all multifamily homes sold. Compare that to Q2 of this year, that number has dropped by 7% down to 26.5%. So where did that 7% go? Well, let's take a look at condos and single-family homes. Investors now make up a record 16.1% of all single-family home purchases. This is almost double the pandemic low in Q2 of 2020 of 9.4%. And 74% of all investors are paying cash for homes. This has made it much tougher for regular buyers to compete, and if you've been in the housing market, then you've definitely felt this. Many properties are getting multiple all-cash offers on them, and many of these homes are entry-level homes that first-time homebuyers are trying to buy. So there's been a real competition, and it's really been burning first-time homebuyers. Let me know down in the comments, have you experienced this? Alright, so let's move on to some more general housing market updates. According to the National Association of Realtors' latest report, existing home sales rose by 1.4% in June over the previous month. This is a great sign after 4 consecutive months of home sale declines. This brings the seasonally adjusted numbers up to 5.86 million homes sold, which is up significantly above the 4.77 million homes sold the year prior. These numbers show that supply has improved in recent months with more homeowners listing their properties. The total housing inventory inventory at the end of June was 1.25 million units. This was up 3.3% from the month of May and down by 18.8% from the year prior, where we saw 1.54 million homes unsold. We currently have a 2.6 month supply of homes, which is up ever so slightly over the 2.5 months from May. We also saw the median home price in June increase to $363,000. This is up by more than 23% from $294,000 from a year prior. And properties in June were only on the market for 17 days on average, with 89% of homes sold in June within the first month of listing. And finally, the percentage of first-time home buyers in June remained at 31% from May. This number is still down from the 35% share in 2020. Next up, let's talk lumber prices. Last week, we saw lumber prices increase to $634 per thousand board foot. This is up $98 from the week prior, where they closed out the week at $536. Overall, since their peak in May at $1,670, the prices have been trending downward significantly. At the end of the week, we saw a slight tick down, which could be a great indicator for the next week or two of lumber prices. We could see another week of tumbling lumber prices, but we'll have to keep an eye on it. Lumber prices have been very volatile. The spike that we saw in May at record prices was due to the pandemic closing down lumber mills. And at about the same time, we saw a spike in demand from home builders and homeowners who were looking to build on to add more space to the homes that they're now spending more time in. So from the shutdowns, we saw supply tumble and demand spike. This was a perfect storm for creating a huge lumber shortage, which is what we've been facing for the last several months. And it's put a major stress on the supply chain. So that's why we saw record high lumber prices in May. But now lumber prices have been following ever so quickly. And this is because as the pandemic comes to an end, more people are going back to what they were doing before, such as traveling and other things. So this has really slowed down the demand for remodeling projects. We've also seen demand fall for home builders, and I'm going to talk about this more in depth shortly. But basically, with increased material cost and shortages of appliances and mechanicals, it's been hard for them to build their homes as quickly as they were before. And unfortunately, falling lumber prices hasn't been immediately felt by builders or consumers. This is because many lumber yards have a lot of inventory of unsold high-priced lumber that they need to sell before they can sell lower-cost lumber. Basically, they bought a lot of lumber when prices were very high, so now they've got a lot of stock of high-priced lumber. And so until they can offload their expensive lumber, we're going to see prices remain relatively high at many lumber yards. And as I mentioned in my previous video, this could take several months for this to happen. And so that's my update on lumber prices. And so now let's move on to the record-breaking condo market. The condo market has been the most recent record-breaking market in the last year or so. We've seen a nearly 60% increase over last year at 72,000 units sold. On average, they are selling above asking price for the first time in almost 9 years. In a record-breaking 22 days on the market, this is 21 days faster than the year prior. This comes after the housing market in general has exploded in the last year and a half. Many home buyers have been priced out of single-family homes, so now they've been turning to condos, which is considered the more affordable option. This is also a major shift from last year because most buyers were looking to get out of condos so they could get more space. They needed extra space for homeschooling, home offices, and just generally living in since they were stuck at home for over a year. But with things now opening up, people are finding this to be less important than they thought it would be long term. And of course, the rising housing prices don't make it any easier. And many buyers now see that condos may be their only affordable option in order to buy a home. And so we've seen a record-breaking 42% of condos selling above asking price in June. This is double the 18.6% share in June 2020 and the 20.2% share in 2019. Nationally, in June, condos sold for 0.7% above asking price. This is above the premium from May of 0.4%. The median sales price of a condo last month was $304,000. And when you compare this to the median price of a single family at $385,000, this translates to you saving about about $300 a month in your mortgage payment, accounting for HOA fees that condos have. And wrapping up condos, I don't personally recommend buying condos if you can avoid it at all costs, and I have a video on my channel about why you shouldn't buy a condo or anything with an HOA fee, so definitely go ahead and check it out. I'll link it down below. Let's move on to mortgage interest rates. Interest rates last week took another dive down. According to Freddie Mac, we saw interest rates for a 30-year fixed mortgage drop to 2.78% from the week prior at 2.88%. This is the fourth week in a row where we've seen rates below 3%, and the fourth consecutive week that we've seen rates drop. And we haven't seen interest rates this low since February of this year. This comes after last week's chaos of equity markets plunging due to concerns of another COVID wave hurting the economy's recovery. And rates are expected to remain volatile until there's more certainty from the Fed about inflation. And finally, rates are staying low because of the Fed's monetary easing, specifically the bank's monthly purchase of mortgage-backed securities. Now let's talk about mortgage purchase and refinance demand for last week. Last week we saw applications to refinance drop by 3% over the week prior. This came after the 10-year Treasury yield dropped from 1.3% to 1.18%. This was in part from investors becoming more concerned about the spread of additional COVID variants and what their impact on the global economic growth could be. The number of refinance applications was also down by 18% from the year prior. Refinances this year in general have been lower than usual because of an influx of refinances that happened last year when rates hit all-time lows. Refinances could, however, get another boost after Fannie Mae and Freddie Mac announced that they were going to remove the adverse market fee that was put into place during the COVID pandemic. This was a fee that was charged to lenders for all refinance loans. This will save borrowers about 1/8% in additional interest. We also saw mortgage applications to purchase fall by 6% last week. This was also down by 18% from the year prior. Much of this drop has to do with homes reaching all-time highs, resulting in many first-time homebuyers being discouraged or unable to buy a home. And as I've mentioned video after video, the main reason that housing prices have increased by so much has been because of low supply but high demand. We've seen homes with 10, 20, 30 offers in the first 5 days of being listed. So this is an insane amount of demand compared to usual. Even though we are seeing an increase in number of new listings, we still have historically low supply of homes. And that problem is only more magnified for more affordable housing. And like I mentioned, we've seen investors purchasing more condos and single-family homes, especially on the lower price range, which has only created a bigger problem for first-time homebuyers in this market. Okay, so now let me give an update on new home construction. Newly built homes have seen a significant decline in recent months. This is in large part due to builders being less certain about the future of the housing market. We saw building permits drop more than expected by about 100,000 units below the 6-month average. This is the lowest point of new build starts since last August. This comes at a time when we've seen building materials increase significantly in price. And this comes from a shortage of materials. Builders have seen delays of months for windows, refrigerators, heating units, and many other crucial building materials. One example is the record-breaking lumber prices that I just talked about, where they reached $1,670 in May. Builders have also been seeing regulatory fees increasing, as well as a major labor shortage. And this has significantly impacted the rate at which they can build new homes. And this also just adds to the overall cost of newly constructed homes. And the decline in new construction homes is certainly not a good sign for the housing market. Given that we are some 6 million homes short, it would take nearly a decade or more of record-breaking building rates just to catch up to where we need to be. A decline in new home construction will only add to this problem. So housing market supply is not expected to get much better, especially from new home construction. Mortgage applications to purchase a newly built home dropped by 24% in June compared to the year prior, and they dropped by 3% month over month from May. This makes the third month in a row that new home purchases have declined. We also saw the average loan size for a new home reach $392,000, and this price is up by 18% from May of last year. So what do I expect for the housing market going forward? Well, housing prices are going to continue to rise, but we're going to continue to see appreciation slowing down, as the housing market cannot sustain an 18% year-over-year growth every single year. And as buyers continue to get burnt out from the market, they're going to continue dropping out of the market. This may lead to less competition for other buyers. However, supply is still going to take some time to meet demand. But as I mentioned, until we can close the 6 million home gap, supply is always going to remain lower than demand for housing. We've been underbuilding for over a decade, and it's really showing. And so that's my housing market update for this week. Check back on Monday for my next housing update video. Thanks for watching. See you next time.